shocking truth. Behind your lower government check. Imagine logging into your bank account expecting your usual monthly retirement deposit, only to find the number is lower than it has ever been. No warning letter came in the mail. No email notice arrived. Just a sudden, unexplained drop in your income. This exact scenario happened a few weeks ago to a viewer named Eugene from Alberta. He was so blindsided that he sat at his kitchen table wondering if he had made a terrible mistake on his taxes or if his benefits were permanently cut. When he finally got through to Service Canada after waiting on hold for nearly 3/4 of an hour, the agent simply rattled off confusing automated calculations that left him completely in the dark. Eugene's experience isn't an isolated glitch. When he shared his story, it exploded with over 900 responses from retirees spanning British Columbia all the way to New Brunswick, Nova Scotia, Saskatchewan, and Manitoba. Every single one of them reported the exact same problem: a sudden reduction in their monthly cash flow and an absolute lack of transparency from the government. The recurring phrase echoing through those hundreds of complaints was simple: nobody told me why. Today, we are lifting the veil on these sudden reductions. What is happening right now across Canada isn't a technical error. It is the result of how the federal senior benefit system is structured. In 2026, many retirees are seeing their monthly payments scaled back because multiple government clawbacks and adjustments are colliding at the very same time. If you receive a combination of the Canada Pension Plan, CPP, Old Age Security, OAS, and the Guaranteed Income Supplement, GIS, you need to know how these programs interact so you can protect your hard-earned money. Why your payments are dropping simultaneously. Canada is currently home to more than 6 million citizens aged 65 and older, a vast number of whom rely heavily on federal retirement benefits. The reason so many people are caught off guard when their checks shrink is that Service Canada's administrative systems do not issue proactive, personalized warnings before an adjustment hits your bank account. The issue stems from the fact that your net income from the previous tax year dictates your benefit levels for the current year. When multiple recalculations trigger at once, the cumulative financial drop can be devastating. Let's break down the 3 specific triggers causing these reductions. 1. The reality of the OAS recovery tax. The first major factor catching retirees off guard is the Old Age Security Recovery Tax, commonly known as the OAS clawback. Under the Old Age Security Act, if your net annual income exceeds a specific government threshold, you are legally required to repay 15 cents for every single dollar you earned above that limit. For 2026, the clawback threshold is determined directly by the net income you reported on your 2025 tax return. Many seniors don't realize that a one-time financial event last year, such as selling a property, drawing extra funds from an RRSP, or experiencing a temporary spike in investment returns, will directly suppress their monthly OAS checks today. While the government publishes a maximum standard monthly rate for seniors aged 65 to 74, the vast majority of Canadians receive a prorated amount based on their total years of residency. When the 15% clawback is applied to an already prorated amount, the drop can equal hundreds of dollars a month. Who is most vulnerable? Retirees who experienced mandatory RRSP withdrawals, those who took a lump sum investment payout in 2025, or individuals who began drawing their CPP for the first time, inadvertently pushing their total income past the threshold. Who is generally safe? Low-income seniors whose total net earnings fall safely below the clawback line, which includes the majority of those qualifying for the Guaranteed Income Supplement. 2. The brutal GIS 50-cent reduction formula. The second and most confusing reduction involves the Guaranteed Income Supplement, GIS. Every year in July, Service Canada recalculates your GIS eligibility based entirely on the net income reported to the Canada Revenue Agency, CRA, for the prior year. The mathematical formula used for this recalculation is severe. For every single dollar of extremely vigilant, criminal syndicates are actively capitalizing on these benefit adjustments to target Canadian seniors. Scammers are making unsolicited phone calls pretending to be federal agents, claiming that a massive government accounting error has reduced your retirement check, and demanding your private banking details to issue a correction payment. Please remember that Service Canada will never call you out of the blue to ask for your bank account details or demand immediate payments over the phone. The CRA will never accept gift cards, cryptocurrency, or immediate wire transfers. If you receive a suspicious call regarding your retirement benefits, hang up immediately and report the incident to the Canadian Anti-Fraud Centre at 1-888-495-8501. Always call the official government numbers listed directly on Canada.ca to handle your accounts securely. Have you experienced an unexplained drop in your retirement check recently? Did anyone ever explain to you how a CPP raise could actually shrink your GIS supplement? Please drop your province in the comments section below so we can track where these reductions are causing the most confusion across the country. More benefit adjustments are coming later this year. Make sure you stay informed so you can protect every dollar you spent a lifetime earning.